Imagine waking up one morning and seeing a headline everywhere. Silver hits $100. Social media is exploding. YouTube is flooded with victory videos, and suddenly everyone claims they knew this would happen. But here's the real question. Most people never stop to ask, what if silver does hit $100? And what if it never does? Because the truth is, both outcomes could completely reshape your financial future, and almost no one is talking about the second scenario. In today's video, we're not here to hype. We're here to think clearly, calmly, and strategically, the way smart money does. This is Empire Economics. And if you care about understanding markets before the crowd, not after, you're in the right place. Before we go deeper, make sure you hit like and subscribe, because content like this doesn't chase trends, it explains what's coming next, and staying ahead of the curve is how real wealth is protected over time. Now let's slow this down, because silver isn't just another metal. It's a mirror reflecting everything happening in the global economy right now. Inflation pressure, currency confidence, industrial demand, energy transition, debt levels, and central bank behavior, all of it flows through silver in a way most people completely underestimate. When people talk about silver going to $100, they usually imagine a straight line up, easy profits, and instant wealth. That's fantasy thinking. Real markets move through stress, confusion, and surprise. If silver reaches $100, it likely won't be because everything is going great. It will probably happen because something broke. Maybe it's a currency crisis. Maybe it's a loss of confidence in government debt. Maybe it's a sudden supply shock combined with exploding industrial demand from solar panels, electric vehicles, and advanced electronics. Or maybe it's all of that happening at the same time. In that world, silver at $100 doesn't feel like a celebration. It feels like confirmation that the system people trusted for decades is changing fast. Prices of everyday goods would already be higher. Interest rates might be unstable. Stock markets could be volatile or falling. So yes, silver holders might see big numbers on a chart, but the real value question becomes, what does that money actually buy? This is the part no one talks about, because when silver goes that high, it's not winning against the dollar, it's exposing the weakness of the dollar. And that changes how you think about wealth entirely. Suddenly, cash feels fragile. Long-term savings accounts don't feel safe. Pensions feel uncertain. And people who never cared about hard assets start paying attention way too late. But here's the other scenario, the one that gets almost no airtime. What if silver never hits $100? What if it grinds higher slowly or stays range-bound for years, frustrating everyone waiting for a moonshot? Most people see that as failure. Smart investors see it as information. Because if silver doesn't explode upward despite inflation, money printing, and global instability, that tells us something powerful about control, market structure, and how capital is being directed behind the scenes. It may mean paper markets are still suppressing price discovery. It may mean industrial demand is being met quietly without panic, or it may mean that confidence in the system, while shaken, hasn't fully cracked yet. And that matters, because markets don't move when fear exists. They move when fear becomes unavoidable. This middle zone, where silver neither collapses nor explodes, is where most wealth is actually positioned. Institutions don't need dramatic headlines. They accumulate slowly, patiently, while retail waits for confirmation. If silver stays under $100 longer than expected, it doesn't mean the story is over. It means the story is still being written quietly. And this is where psychology becomes more important than price. People get bored. They sell. They rotate into whatever is exciting that month. And that's usually when long-term positioning becomes most powerful. Empire Economics has always focused on understanding cycles, not chasing predictions. Because predictions make people emotional, while cycles make people prepared. Think about it this way. If silver explodes to $100 quickly, emotions spike, decisions become rushed, and mistakes get expensive. If silver moves slowly or sideways, patience gets tested, but discipline gets rewarded. Both scenarios create opportunity, but only if you understand what game you're actually playing. Are you trading headlines, or are you protecting purchasing power over time? Are you reacting, or are you positioning? These are uncomfortable questions. They're necessary. And here's something else most people miss. Silver doesn't need to hit $100 to matter. Even moderate moves can signal major shifts under the surface. A steady climb with tight supply and rising industrial use can be more powerful long-term than a sudden spike driven by panic. The market often whispers before it screams. The problem is, most people only listen when it's screaming. In the next part, we're going to dig deeper into how both of these scenarios affect everyday investors, wages, cost of living, and the broader economy, and why waiting for a single price target could be the biggest mistake of all. Stay with me, because what comes next might completely change how you think about silver, risk, and financial security in the years ahead. Now, let's take this conversation deeper, because whether silver hits $100 or never touches it at all, the real impact shows up in places most people don't connect to the metal at first. It shows up in wages, in rent, in groceries, in energy bills, and in how confident people feel about the future. If silver moves sharply higher, especially fast, it usually means inflation isn't slowing the way officials claim it is. It means the purchasing power of money is being questioned, not just by investors, but by everyday people. That's when behavior changes. People stop saving in cash and start converting it into anything tangible. That demand shift alone can push prices of assets higher, even if the economy is technically slowing. But here's the catch. When silver is high because fear is high, governments respond. Regulations increase, taxes shift, narratives change. The rules of the game don't stay the same. This is why price alone is never the full story. On the other hand, if silver stays suppressed longer than expected, it tells us something equally important. It tells us that confidence, even if artificial, is still being maintained. Markets are still functioning. Credit is still flowing. And most people are still trusting that tomorrow will look mostly like today. That environment feels calm on the surface, but underneath it builds pressure. History shows that long periods of control often end suddenly, not gradually. That's why experienced investors don't wait for permission to prepare. They position during quiet periods, not during chaos. This is where silver becomes less about speculation and more about balance. Not all in, not all out, but intentionally present in a portfolio as insurance against outcomes no one can predict perfectly. And let's be honest, most people watching this aren't trying to get rich overnight. Right? They're trying to not fall behind. They're trying to make sure that 10 or 20 years of work doesn't lose value quietly. That's the real fear, and it's a rational one. Silver fits into that mindset differently than stocks or crypto. It doesn't promise exponential growth every year. It promises durability. It promises relevance across systems, across currencies, across political cycles. And that's why the question, will silver hit $100, is actually the wrong question. The better question is, what role does silver play if the next decade looks nothing like the last one? Because the signals are already there. Debt levels are historic. Trust in institutions is fragile. Technology is moving faster than regulation. And global power is shifting in real time. In that kind of world, relying on a single outcome is dangerous. Flexibility becomes more valuable than prediction. That's the mindset Empire Economics tries to build, not telling you what will happen, but helping you think clearly no matter what does happen. If silver explodes upward, you want to understand the risks that come with that celebration. If it stays quiet, you want to recognize that quiet doesn't mean irrelevant. It often means underestimated. And here's something I want you to think about as we close. The loudest voices online usually show up at the extremes, maximum hype or maximum dismissal. The most successful investors tend to operate in the middle, always informed, patient, and calm while everyone else argues. If you've made it this far in the video, you're already thinking differently than most. So let me ask you this, and I genuinely want your answer in the comments. Do you think silver needs a crisis to finally break free, or do you believe it will slowly reprice as the world changes around it? Drop your thoughts below, because different perspectives help everyone think sharper. And if this video helped you see silver and the economy from a clearer angle, share it with someone who's tired of clickbait and wants real context. That's how this channel grows, and that's how better conversations start. Make sure you're subscribed to Empire Economics for more deep dive discussions like this, because the next decade won't reward guesswork, it will reward understanding.